following is an update and key technical analysis on QQQ. Displayed within the outer layers of the weekly interval, the much larger picture to the entire landscape of the price action data of this ETF, big component here to the NASDAQ. And we had a insane AI frenzy fueled rally off which you would call a cup and handle bullish formation pattern. Had a nice clean breakout, popped that 50 weekly moving average, and it had been in escape velocity since that key inflection point, rallying on two back-to-back double-digit years to 20% plus in year-to-date gains, fueled only which would call in a divergent high. You have complete bearish divergence here within the relative strength index, a confirmed crossover divergence off the price percent oscillator, and additional damage being inflicted within the histogram of the oscillator, just flipping negative and increasing bearish divergence, showing clear downward momentum shifts. Some magnitude of this key inflection point, we have had a red solidified breakdown candle close going back since really 2023, which actually marked the bottom of that AI fueled rally on that nice clean, call it a 10% correction pullback, and we're within that beginning stages of a 10% pullback as well. 14% off its highs after I issued that breakdown sell signal off the US Tech 100 NASDAQ futures in my previous video. This is the bigger landscape to the weekly, and we could be within beginning stages of putting in a much larger, bigger red infused candle close breakdown sell signal within the weekly, which will usually overpower the near-term intervals. Bulls have really taken off the last day here and defended some of these key inflection points called the 382 Fibs retracement. But I want to go back to where it started off this channel, and it is showing clear weakness on a breakdown of this ascending channel, of this ascending yellow channel off multiple key technical major reactionary highs and lows, really across that entire sphere there. And we are testing, which we would call the 382 Fibs retracement, called the 465 handle. And that is pretty decent Fibonacci price support there. And bulls stepped in pretty aggressively just within the last day or two, where the trade war really broke out in between Canada and the US. And while Canada sort of repealed back some of its electricity tariff, that sent the stock market soaring off its lows on Tuesday, I believe. And it has been up 1% today. And I believe this pivot point really marks a pretty key telling zone, where if this level is taken out by short sellers and bear traders to go on to re-challenge the 448 handle, which would be another 5% drop from here, or 5% crash from here, then you're looking at a Wilder's relative strength index potentially undercutting the 35 handle, and that would create further additional damage that would be inflicted within these key momentum indicators, showing an even much larger loss of bullish momentum on that part, and would only indicate further downside pressure to come if that level is taken out, ultimately re-challenging much larger price support at the 448 handle, call it the 50% Fibs retracement. And that will be a line in the sand for long traders and or bull traders. But I want to take you back to the very beginning of why this primary, call it a multi-decade ascending trendline support level off the 2008 major reactionary lows, and it cuts through a series of wicks and crashes with an additional Christmas Eve 2019 stock market massacre, cuts right through the COVID crash lows, which marked the bottom, coincidentally, leading to a 126% rally to the upside, and it marked the October lows, the bottom of the stock market 2022 crash, where Fed and Powell hiked the fastest rate velocity in history, hiking rates at the fastest velocity in history, which ultimately led to a Silicon Valley bust and hundreds of regional banks on the verge of collapse before the banking fund term program initiated and kicked into high gear, put in a divergent low. Nice clean divergences. You had positive or bullish divergences. Completely broke out of that primary downtrend line. Back tested that key inflection point. It was off to the races since. But once again, just has been historically acting as a magnet each and every time. This is in confluence of its 200 weekly moving average here in the red, and that has had some very tightening correlation amongst years, decades in the making. And that would be a key revisit if things were to get really bad. You're talking about an additional 15 to 16% crash to the downside, in which long traders, long-term investors, you name it, ton of buy orders must be present within this key range. And correlation of the 404 price support level, if we take that level out, if we put in a weekly solidified red candle close, and you will be seeing me harp and hype up this key big level over and over again. If I have to come back and this ascending uptrend multi-decade price support is taken out with conviction, then you are beginning to talk about a potential secular bear market, if anything. Short sellers, bear traders are going to be aggressively looking in for a re-challenge and retest of this duo, call it a triple transitioning price resistance level in correlation of its 50 weekly moving average, the bottom of its ascending uptrend price support level, and its 499 price horizontal 236 fibs price resistance level. And that is big time resistance for any short sellers to add to any existing short trades positions, if not opening up a entirely new short trade position for a big move to the downside in a favorable risk reward ratio short trade setup, to go on to re-challenge the 382 fibs 460, call it 465 handle once again, and then ultimately 448 for an 11.6% crash to the downside. Bull traders, long traders want to pop this level at all cost, take out the 499 handle, go and overcut right back above that key psychological $500 mark to go on to re-challenge and try and burn those negative and bearish divergences that had continued to establish here on multiple indicators, ultimately popping that level, burning and negating those divergences to re-enter escape velocity, remaining back into the primary channel of this upper and down ascending trend line. Short sellers will also be within the beginning stages of eyeing out the 448 handle, which is in correlation of the 50% fibs retracement. If we take that level out, go on to re-challenge, take out the 382, flush right through, I believe this level will mark the biggest key inflection point for short sellers to hone in on, and ultimately a set of margin calls, stops to go off, forced liquidations, and I would only suspect a fury of complete panic selling and additional established, more violent move to come. Tech and QQQ could be primed for a brutal reversal where the AI-driven hype that sent these valuations soaring is now colliding with tightening liquidity and an over-leveraged system that really can't survive without cheap capital. With the Fed holding rates higher for longer and inflation refusing to back down, high multiple stocks are running out of room to justify the overly stretched valuations, and the decade-long tech bubble could meet its reckoning, as levered traders and investors chasing the highs may soon learn what real downside looks like.